That's because I haven't switched my microphone on yet.
Well done, you.
Hopefully everyone can hear me. I've actually managed to switch my microphone on, which is always a bit of an effort. Just adjust my microphone. Apologies about that. So now you know everything about Italy and the history and all the rest of it. Fascinating, wonderful country, wonderful, wonderful place. Not so great for business, but wonderful place for holidays and wonderful food. Lovely. Okay, focusing on the pound. I'm just on the pound Swiss for several reasons. First of all, because it's focusing on the pound. We've also had this very, very solid move lower, and as you can see over here on the 5-minute, there we go. The pound is very strongly oversold, and equally the Swiss franc is very strongly overbought, the green one up at the top. And obviously it's a place that my eye was always drawn to on the currency strength indicator. But if we focus on the chart for a moment, let's just pop this one open. This is the 10-minute. It's just a nice example of congestion building. It also brings into play this region here, which was on the accumulation distribution indicator, which is based on price. So what we're looking at here is not only one level of resistance coming into play, but actually a cluster of two, which are overlaying one on the other. In their own right, they're strong, purely based on the fact that the width of the line is quite wide, and the wider the line, the greater the number of times that level has been hit and repelled the advance, if you will. In other words, acts as resistance in this case, or support to the downside. So not only have you got one level there, we also had two levels there. So an extremely strong area of resistance building from a price-based perspective. We're also trading around the volume point of control here, which is the heaviest concentration of volume. And thereafter, once we start to see the breakaway, this is 7 o'clock. So in terms of volume comparison, this is through from Asia. This is 10:30 our time last night. This was 9 o'clock. Lots of volume coming in as the US cash markets close off. Then we're into the Asian session, so we can compare volume here. Once we come out into Europe from this point onwards, then we can compare volume in here from 7 o'clock to 8 o'clock. Now we're moving into the London Open through 8 o'clock, and we can see the uptick in volume here as well. Just want to highlight a couple of things here. First of all, just pull that up, make it a little bit easier on the eye. There we go. Breakaway trading is a terrific way to trade, but you do require patience for it. And I know a lot of traders don't have patience, so it's a question of jumping on a trend once it's underway. Once this move starts tracking lower, we've got a volatility candle, then we get another volatility candle. But if you weren't in at this point, then you've got a decision to make. And these are the sort of candles, I highlight them all the time. These are the sort of candles you're looking for constantly in a downtrend. Good volume under there, nice big wick to the upper body, narrow spread candle to the body. You know, this is effort to rise. This is the market makers selling into a weak market. In other words, it's a market that's already weak. It's falling. The market makers are dumping in here. The trapping traders are selling into weakness, and down it comes. Exactly the same here, although this was a volatility trigger, so you'd expect some price action within. We get another one here, but we're carrying on down. And now what we're seeing is further continuation of that move. And of course, it was picked up by the trend monitor. And in this case, there was no transitional change in color. We just had a straight through change from bullish to bearish, picking up the fact that this was a very aggressive move. There was no, we might have had a little bit of more price action here, perhaps further congestion in here, in which case this would have gone into maybe a darker blue or through into darker red first. But we've actually had a straight through continuation of that bearish sentiment. So continuation of the selling of the pound. On we go, you know, down onto the next level. And using multiple timeframes in like this, it just gives you so much confidence. Let's go up to the 1 minute, because we've got, this is a microcosm, if you will, of what we were looking at on the 10-minute chart, where basically you've got pretty similar price action, to be honest. You've got the volume point of control here. So we were trading there in other words, in price agreement at that point. So there was no bullish or bearish sentiment to drive the market. We've got another cluster here of two, one above the other, not as close as on the previous, but certainly very close and very strong because they're acting in concert together. The trend monitor, you can see here, did actually go into a darker red here, but came out the other side and into bright red again. So in other words, it reflected the fact that the sentiment is obviously bearish. Bear in mind, this is 1 minute. So the sentiment remains bearish, a little bit of congestion, but we don't even go into dark blue. We just come out the other side into bright red again and on down to the next level. Volume is now starting to rise. See what the volume is on this particular candle. We want a nice widespread candle with good volume to support it. I've actually got this switched off because I've got so much volume coming in on all the various charts. Just to pick up on what Anna was saying about the bucket solution, basically on MT4, MT5, if you're running multiple charts, and I do mean a lot of charts, you can run multiple versions of your platform, MT4 or MT5. In other words, you download several versions, run them in parallel with one another, and that actually it manages the memory of your system much more effectively, which means you can run multiple charts without driving the capacity into the ground. And it's all explained on the website. If I get time later on, I'll show you where the link is. It's very simple. It's on the support pages anyway. Okay, a little bit of buying coming in today. We had a candle there to the downside. The other important aspect of this particular facet of price behavior at the moment is, as you can see on the charts, we are moving down into these low volume regions in terms of the volume point of control, which is also a good thing if we are short, because what that means is that we should move through these regions pretty rapidly because there's nothing in the way from a volume perspective to support the price. So if we move up to, let's go to the 10 minute, there we are, we're moving down into this region all the time. There's nothing below. We go up into the slower time. We go 15, 20, 30, whatever time frame. So when you get to these low volume regions, you can see it here. And equally to the upside, if this was an upside move, this would be great because it means the volume is falling away and volume is therefore not acting as a resistance to progress. And it's exactly the same as using support and resistance from a price perspective, although what we are doing is using it from a volume perspective. And that's another aspect of the volume point of control. And it's so powerful because it gives you a heads up. Pull the 5 minute up, gives you a heads up as to what to expect next. You know, what is going to happen next? And that's all we want to know as traders. You're just following this move down. It's nice and straightforward. There's nothing scary here. You know, there's nothing to frighten the horses. You don't need to panic. Just sit there in the move. Just make money. Keep grabbing it. Keep grabbing it. If you had your stop loss in here, you'd be moving it down. You'd maybe, you know, track it down to this level here. You know, maybe lock in some profit at that point. That's fine. Then you'd be waiting for the next pause point to come up. Maybe move it down to the next level. You might bring it down to here if you're tightening it up. The other great thing about moving a stop loss and manually rather than having it as a trailing stop loss is that if you've taken a big chunk out of here and you actually want the market to take you out, in other words, you want to hand that decision making over to the market, move it right tight down to the last candle. Then if there's a snapback, you get taken out and you're happy, you've got a load of profit and you're out of the market, it's banked, job done, because you've handed that decision over to the market. If you feel alternatively there is more to come, then don't move it so close. Move it down to the previous congestion phase, you know, somewhere that will give you a bit of protection in terms of a pullback. In terms of, you know, jumping in again, going back to what I said earlier on, you know, you're looking for candles like this effort to rally, effort to rally, effort to rally. You've got 3 of them on the trot there, you know, wicks to the upper body. Yes, you've got a little bit of a wick to the lower body, but the primary wick is to the upper side of the candle. So this is, you know, effort to rally. You've got a ton of volume driven in here. They ain't going nowhere purely because there's no buying. This is all selling. This is the market makers selling into weakness again. Traders will be jumping in thinking, oh, I'm at the bottom, you know, I'm going to buy. And why are they going to buy? Purely because we've had a trend lower. It's literally as simple as that. They will buy because there's been a trend lower, and therefore I think I'll buy because it's going to reverse. Fine, you know, I'll rest my case on that one. Not going to comment further on that one. So there we go. This one, as you can see on the 10 minute, I've actually got the volume building in real time. So in other words, it's building every single tick change. It's very easy to do if you're on NinjaTrader. You just go into the indicators, you go down to volume up, down, and you click it on here. You can either have it on tick or you can have it on bar close, whatever. This one's on tick, so it will fill real time. So you get an immediate sense, obviously, which is what you want to see of volume coming in. What you don't want to see is a big wick to this lower body, because that will signal some buying coming in. This is on a 10-minute, and we've got probably another minute or so to run on that one. So we'll see how that one closes off. But this is all very comfortable. Trend monitors red, trend monitors red, trend monitors red, red, red. This you wouldn't expect to see any change purely because it's on the daily. But ultimately, if this becomes broad selling of the pound longer term, in other words, on the daily chart, then you will see it, of course, and it will ripple right the way through. You can see here, you know, once the currency gets up into overbought up here, there's no guarantee that it's going to roll straight away. The Swiss franc is still being bought strongly. The British pound is still being sold heavily. And if we go over onto the currency array, up at the top, there we go. What are we seeing? Okay, I've isolated out the pound. This is 3-minute, 5, 10, and 15-minute. This is basically what we're seeing, this heavy, heavy selling of the pound. You might not be able to see it, but the pound Swiss is the weakest. It's down here. You can see it at the bottom here. It's at the bottom here. It's at the bottom here. It's not at the bottom here. We've got New Zealand Swiss here, which is down there. But if the pound Swiss is one off there, but you can see it here. It's strong. So what we're seeing right now is first of all, question is, you know, which is the strongest? And what we want to be seeing is literally what we're seeing now. We want to see the euro pound swinging up further if there's more downside momentum. So you want to keep this one. You want to see this one going up steeper, ever more steeply rather. And equally, these ones at the bottom, you want to see these all moving down together. The one that stand out at the moment is the pound New Zealand. It's not joining its brothers and sisters right now. It is over here, but you want to see that reflected over on 15 as well. But broadly speaking, sentiment towards the British pound right now is pretty negative, and it's reflected across the complex in its entirety. What the array tells you is the strength of that selling by the inclination of the line. So the steeper the line, then the stronger is that selling, the stronger that particular trend. You don't even need to look at a chart. You can just eyeball it off here. And in addition to that, what it then gives you down the ranking ladder here, it gives you a sense of when that particular pair is potentially reaching an oversold, or up at the top, an overbought state. When it's potentially oversold, they'll be in this color shading of a darker red with brackets around and the term OS. And when it moves to this particular arrangement of a bright red, no brackets, then that is at a potentially overbought state. It doesn't mean it's at an overbought state. It's just a heads up to give you an alarm, a warning. That is one to go and consider. And obviously you would do that in several different ways. You'd be looking at sentiment, you'd be looking at the charts, you'd be looking at what's going on broadly in the market, you'd be looking at the currency strength indicator, etc., etc. It's a constant process of back and forth. Let's go back onto the charts. So what we're looking at is some potential buying coming in. What's interesting is that we've got some buying under this particular candle. There's a wick to the lower body, good volume under that candle. We've also got a volatility trigger come in on the 10-minute. So in terms of what we're doing up at this time frame, up at the 1, 3, and the 5, it's certainly giving us a clue that potentially we are likely to see certainly some possible congestion follow. In other words, trading within the spread of this candle, or possibly longer term, a reversal. Doesn't always happen, but if you're in this particular position, and I've said this many, many times, if you've got a whole bunch of profit in here and you get one of these on this slower time frame, it may well be time to either close out some of that position or the position in its entirety and just head for the hills, wait for the market to break below this candle, which looks as though it may well do, and then you can always jump back in again. What have you lost? Nothing. You've lost maybe a few pips in here that you've given up. Well, that's fine. Rather that have it banked and safely locked in your piggy bank, rather than be sat through potentially a congestion phase, which is going to cause you stress. The other way of doing it, as I say, if you have multiple contracts on here, whether they be micro lots or mini lots, it doesn't matter. If you're scaling out, in other words, you've gone in with a handful of contracts, then take 1 or 2 off the table. If you had, let's say you have 5, you might take 3 off and leave 2 to run. You might take 4 off and let 1 to run. So you're still in the market, but you've actually banked a big chunk of your profit. Scaling in and scaling out, there's no right or wrong way of doing it. Some people use both, some traders use both, others prefer to use one. It has different nuances, if you will. Scaling in, if you like, is based on some historic positive event. In other words, you've seen some profit building and you're basically building a position in the market, so you're scaling in. Scaling out is based on the premise that you're right from the get-go, which is not always the case. So, you know, it suits some traders, doesn't suit others. You have to find what suits you. And if you're a novice trader, it's not the place to start. You have to start with just getting the direction right, first of all, and understanding how this market works, and then starting to build positions in the market in that way. So what we're seeing at the moment is what we expect to see. Let's pop that up. There we go. So our candle, so we're in that spread of that candle. Good volume under that candle. So we know there's some buying in there. We just want to see what happens over the next, 5, 10, 15, 20 minutes. I'm not going to sit on this chart for that particular time frame, but it's just a very, very comfortable way, and it just brings so many elements together. And if we head over onto the currency strength indicators, let's just see where we are. There we go. And that's what we're seeing right now. This is 1, 3, 5, and 10. This is where we are. We've got heavy selling of the pound, very strongly oversold. This is on the faster time frames, and the Swiss franc equally. And what you're looking for constantly with the CSI, which is your radar on the market, basically what the CSI does is it breaks the forex world down into the building blocks of the market itself. In other words, the currencies. Rather than a currency pair, you are looking at the individual assets of forex, the individual currencies. And thereafter, what you're considering with the CSI is which potential pairs to consider, which ones not to consider, what's moving strongly, what isn't moving strongly. The strength of the line will give you, in much the same way as it does on the currency array, it will tell you what is moving strongly and what is not moving strongly. So the Swiss franc clearly, the pound clearly. You're seeing the Aussie starting to roll over. You can see it here. We've had heavy selling on the Aussie in the last few minutes. The angle of inclination is steep. So there's strength in that move. There's strength in that move. Which pair would you look at it against? Well, you've had a cross. We've got a cross on the yen. We've got a cross on the yen. So certainly the Aussie yen, I can tell you without looking at a chart, certainly on these very fast time frames, there's a nice trend developed. You can see the Aussie is diving. The yen is up into overbought. You've got some way to go on 3. Got quite a way to go on 5 and a fair way to go on 10. We haven't even crossed on 10 yet. So this is going to continue and move right the way through the time frames. Then we're going to see a nice, strong trend developing into the slower time frames. And obviously, if you're looking at the Aussie yen, what are you also going to be looking at? You're going to be looking at sentiment. So you want to go down to the, see what the indices are doing. There we go. That's what we're seeing right now. Let's pull it. This is on the, I'm on the ES here. So let me just pull any of these up really. Let's just put the 10-minute up. There we go. So we had a little rally. This is 7 o'clock. Don't think that this is not tradable. It's just purely distorted by the fact this is with a massive volume that came in last night. This was a collapse in all the US markets late on last night. It was also reflecting the fact that earlier, and we'd highlighted this in the VPA traders room, that the VIX was rising, but it was rising with equities. Now that tells you straight away there's a total disconnect in the market. And what happened an hour or so later was this: it just collapsed, and it was signaled on the VIX, which is why we put it up in the forum, because it was so clear what was happening. There was a huge disconnect, and that's what happened. To come back to where we are, this is 7 o'clock, 8 o'clock. We've had a little rally into 8 o'clock. Now we're starting to see that sell-off. That's why we're starting to see the Aussie yen, amongst others, reflect that in terms of sentiment. Let's go back to the pound Swiss. There we go. What are we seeing? Oh, we're seeing a little bit of a rally. Surprise, surprise. It's hardly a great surprise. If you're in the know, you understand VPA, you've got the indicators. It's pretty straightforward stuff. We've got buying coming in here, more buying here. We have the volatility candle here. It's what we expect to see. So, I rest my case. If you're in a trade and you get the volatility trigger and you've got some decent profit in there, take all or some of it off the table and bank it. either leave some to run or take the whole lot off, and then you can just sit there and wait for this to develop. And of course, we've also got the fact that the pound is now down here very, very, very strongly overbought at 3.9, not quite down to zero, it's getting down close. And this is a, sorry, oversold, I beg your pardon. And the Swiss franc up here in the overbought territory. So a really, really comfortable, nice trade. Now coming to a pause point, which is what we expect. It's signaled on the array, it's signaled on the currency strength indicator, and it's more importantly, it's signaled on the charts. I'm going to pause there.